All right, let's get a check on what's playing out with the crypto market now. I did see green on the screen earlier with Bitcoin trying to break that resistance of about $100,000, but we're seeing 99,500. Just about $500 more, and you're back there, 2.53% up. And we're seeing Ethereum not left out, also trying to get back to that $2,000 psychological level, 7.54%. Solana's not left out. Cardano's up about 6.3%. So we're seeing most of the altcoins fully in the green with this big jump there we're seeing with Bitcoin, and with Bitcoin dominance sitting at 62.72%. Let's get a check on most of the headlines in the crypto space. We see Coinbase. They've unveiled a Bitcoin yield fund. They recently launched a feature that could change how investors view Bitcoin. The Bitcoin yield is now real for institutions outside the U.S. The new fund, launched by Coinbase Asset Management, allows non-U.S. institutional investors to earn between 4 and 8% annual returns, paying them directly in Bitcoin. And we also see Bitcoin dominance there. I mentioned before, 65%. Yeah, it's normally ranged between 50% to 55%, but we're seeing a big surge there, showing that Bitcoin has more dominance compared to most of the altcoins in the market, and that's growing. We know Ethereum has the second largest dominance there, and so we're seeing that shrink with most of the altcoins, even though we're seeing the prices rise at this point. We did get a forecast that this could rise to as much as 90%, at some point by some influential crypto analysts there. But we'll see if that plays out. To other matters now, see Nigeria recently took a significant step by classifying Bitcoin as a security under its new regulatory framework, marking a bold shift in the country's stance on cryptocurrency as a global landscape of crypto regulation. That continues to evolve. Many are looking at how other countries are addressing this issue. Joining us now is Arushi Goel. She's the head of policy, Middle East, North Africa, Chainalysis. Great to have you on the show.
Thank you, Ladi. Lovely to be back again.
Fantastic. So we see we've had that argument, in other countries. The previous leadership, the Securities and Exchange Commission in the U.S. did say, most of these cryptocurrencies were securities. There was that argument back and forth. But here in Nigeria, Bitcoin has been labeled a security under the new law. But talk to me about how other countries are handling this tag, for Bitcoin and most of these cryptocurrencies.
Yeah, that's always an interesting discussion, right? I mean, in Nigeria specifically, it's obviously a positive and a significant shift, especially given that a few years back, the regulatory environment was quite restrictive. In terms of what's happening in other jurisdictions, I mean, to be fair, classification is one of those areas where we've seen a lot of global fragmentation. In the US, for instance, which is now starting to deliberate market structure after several years of regulation by enforcement, we're obviously hoping for some clarity to come forth in the coming months. Europe, on the other hand, they kind of went ahead and enacted a crypto-specific framework, widely known as MiCA, or Markets in Crypto Assets, which essentially categorize crypto under three broad buckets. You could be asset referenced, that is, backed by a basket of assets. You could be e-money backed by a fiat currency, or you could be a part of this separate bucket, which is all other crypto tokens. So all your Bitcoins and Ethereums would be a part of it. UAE, for example, at least one of the regulators where I'm based right now has actually taken an activity-first approach. So they've kind of chosen to focus on the functions that is provided by the service provider rather than a token classification. So anyways, I think the idea is that jurisdictions have either built out very specific crypto-related rules and regulations, or they have kind of tried to align with the existing framework. So they've all kind of approached this differently at very different paces. So what has really resulted is this a bit of an uneven landscape where every country has a different approach in terms of how these assets can be used, who's the primary regulator, what kind of obligations apply. That said, I do think some kind of recalibration will happen given the pace at which the industry moves.
So, now that we have that classification in Nigeria with, Bitcoin being a security, do you think that will open the floodgates for, TradFi, that's traditional finance, to, jump in, on Bitcoin? Because we keep hearing about, MicroStrategy, buying all of that Bitcoin.
Yeah, well, I mean, that's, like I said, it's obviously good news, and Nigeria has kind of consistently ranked in top 5 of the Chainalysis Crypto Adoption Index over the years. So regulatory clarity is a bit overdue and welcome. And just taking a step back, it's not like there was a regulatory vacuum to begin with. I mean, we did in Nigeria have the 2022 SEC rules, which kind of created a sandbox light regime. And even the central bank had kind of gone back and issued a guidance on how banks could interact with the crypto firms and manage their risks. So, what we're really seeing now is the regulatory perimeter being clarified and crypto now being formally slotted into the capital markets regime. Now, for the sector, this raises a bit of both opportunity and obligation, right? Because your compliance expectations will go up. You would likely need to have more disclosures, better, robust internal controls, probably some more strengthened capital requirements. And there's always a possibility that it may concentrate the field around more mature market players, but obviously bringing a degree of legitimacy. For traditional financial institutions like the banks, this is once again a very meaningful development, right? But banks have, they've obviously been kind of making a shift from being crypto averse to trying to understand what the risks are when it comes to crypto. And now having that legislative clarity and now being able to, let's say, work with an SEC licensed entity would obviously bring a level of comfort and confidence, right? In terms of whether banks can hold crypto on their balance sheets or can have models for crypto lending, I think there's still a bit of a way to go because we are dealing with a whole plethora of rules and regulations, both domestic and global.
Yeah, that seems it might take a long time before you see, African entities accumulating Bitcoin and adding that to their balance sheet. But one big worry that doesn't seem to go away is, the scams. Talk to me about what you're seeing, with, handling in regions like Nigeria and, some countries in Africa.
Yeah, I mean, crypto crime is, of course, evolving, and globally, I think what's been concerning is that we've seen almost every major criminal activity now has a crypto nexus, whether it's frauds or scams or sanctions evasions, right? So even though illicit crypto activity now comprises less than 1% of all crypto activity, it continues to be a bit of a real risk. And I mean, scams and frauds are obviously a major risk, particularly the most profound ones like the investment schemes or the so-called pig butchering scams that are exploiting the trust of the victims. Again, what's been interesting is how they have evolved, right? They've evolved to be more organized, a bit more professional in nature. We've kind of seen it emerge like crime as a service. We've seen bad actors, sell off the shelf money laundering tools, impersonation kits, and so on and so forth, which are openly being sold or rented through public or semi-public platforms. However, I would like to highlight that many of these networks continue to exhibit low crypto literacy, right? I mean, they are using crypto for speed and perceived anonymity, but they often lack the operational depth to hide their tracks. And that's where we've seen law enforcement very effectively leverage on-chain data analytics to trace through, to investigate, sometimes even to dismantle some of these criminal networks. So while the crime is rising, we do have, things like regulatory clarity that's happened in Nigeria now, as well as law enforcement capability development that's making us much better in terms of making sure we are not only reacting to that crime, but in a way also being able to prevent that crime in the first place.
Right, definitely. The regulators have a lot of work on their hands, navigating most of these scams that happen in the crypto industry and trying to protect, most of these investors. Thank you so much. It was great having your perspective. That was Arushi Gors, is the head of policy, Middle East, North Africa at Chainalysis. Thank you for coming on today.
Thank you.